Inching towards 11,000, that's what the SGX Nifty is indicating. Cues are positive this morning. Let's get the conversation going with our next set of experts. We have Mr. SP Tulsian of sptulsayan.com joining us now. Good morning, sir. As always, great to have you on the show. Let me start by asking you about paint companies. With this, massive plunge in oil prices, they'll continue to be in focus. Would you recommend any buys right now? And if so, would it be on the big names like Asian Paints or maybe the tier 2 companies?
This would be actually in the paint space. There are only 4 stocks, which are available. In fact, I'm excluding Shalimar Paints from that. So you are left with only 4 choices, and they are all largely in the large cap space only. If I go take the names of Asian Paints, Berger Paints, Kansai Nerolac, and maybe the fourth one is that multinational company. So my point is that I will only be buyer in 2 stocks, that is Asian Paints and Berger Paints. Because I'm not saying that Kansai Nerolac is not a good company, but if you really take a call, the performance has been stagnant. The kind of volume growth which we have been seeing in case of other companies, like take for instance the Asian Paints, they have set up the new plant in Mysore, and that has gone partly in production, and that too in the water-based plants, which are less dependent on crude. So taking that call on the volume growth expected for these companies, actually paint is the only sector which has shown a double-digit growth in the last 2 decades on the top line and bottom line. But as I said that there are only 4 choices available in this space, you are not left with any other choices. So I will rather be picking up the stocks of Asian Paints and Berger Paints, and I will give a pass to Kansai Nerolac and Akzo Nobel. And Shalimar Paints is, as I said, that it's a loss-making company and has not been performing well. So this is a scenario going ahead on the paint sector.
Okay, Mr. Tulsian, hi, good morning. I wanted to talk about IDFC Bank and Capital First. That merger has come through. Of course, both stocks will trade as is today because the record date is set for the 31st of December. But how would you move now on this merged entity?
See, the merged entity, we have a positive view. Now, first, if you take a call on the shares, which needs to be acquired, there is a arbitrage opportunities available of 0.5%. If you take a call now about the swap ratio of 13.9 shares of 1 share, Capital First of 1 share will be given 13.9 share. And if you calculate that, this giving you the arbitrage advantage of about 0.5%. Some 15 paisa to 20 paisa. So we are in fact keeping quite positive view, because if you take the merge scenario now going forward, you have a loan book of about 1 lakh crore plus, to be precise 1 lakh 2,000 crore. Of that, 33% is the retail loan. And in fact, if you see the Capital First, I'm taking the scenario prior to that. Capital First has the specialty and forte in expanding in the retail space. In fact, of their total loan book of 32,000 crore, they had 95% in the retail and SME. So that is obviously the new CEO, V. Vaidyanathan, CEO and MD of the merged entity, that is IDFC First Bank, will be focusing more on the retail going forward. And if you take a call even on the asset quality, the IDFC Bank, having taken a hit of about 600 crore as an exceptional loss, with their provision coverage ratio of about 80% is seen to be quite healthy. Now going forward, I think technologically this is the most advanced bank, clean bank, with the 200 branches and with the focus on the retail going forward. They should be able to clock a growth of about 30% in the retail book, and overall maybe about 20% plus on the overall loan book, which will be seen quite positive. So going ahead, and even if you take a book value parameters, a book value of the merged entity is seen at about 37-38 rupees. So it is available now at a price to book of 1.1, which is seen quite attractive. So overall, keeping extremely positive view on the merge scenario going forward on the IDFC First bank going forward.
Okay, all right, Mr. Tulsian, I request you to just stay on with us. We'll quickly get some trading ideas in as well on the F&O side, wrapping up the cues there. Amit Gupta of ICICI Direct is joining in. Amit, good morning. The mood and the sentiment seems to be positive. What trades are you going with today?
See, first of all, for Bank Nifty, we have written the put options. 26,500 we had written. The premium has come down because the volatility has come down very sharply. Now 26,800 put options we are recommending. So my sense is, because 27,000 put base is higher than the call base eventually. So till this expiry, this momentum is likely to be there. And Bank Nifty price ratio has been increasing. So that means the Bank Nifty is outperforming Nifty right now. So such kind of trades can be done. And when we come to the stocks, then because the crude has come down, we had already seen $1.2 million per barrel of cut announcement, but even then the crude is not moving and rather came down. So my sense is we should start definitely looking at the users of the crude, and as you already discussed, I think the paints, Asian Paint, we are recommending to our clients. Now if you look at from the mid of 2017, this stock has already consolidated around 1250 levels for a pretty longer period now, 1.5 years. And now what is increasing in the stock is the delivery pickup. If you look at the delivery Z score of the last quarter and the recent reading, it has increased by almost 25%. In fact, yesterday delivery was also around 65%. So my sense is now the investors have started buying this stock, and it is possible it can move beyond 1400 now eventually. So our target is 1440, that is the first target, but my sense is it can go much ahead. If you look at the futures open interest, it had come down actually during this consolidation, but now the fresh positions people have started building up. Leverage is still not very high, and despite the fact it is hovering near the higher levels. So my sense is there is a lot of room for this open interest to get added. Yesterday around 2% addition we had seen, and that will give a lot of kick to the stock on the higher side. From the mid cap space, we have Petronet. I think the oil and gas overall was very sluggish. I mean, we had seen a lot of stocks were down, the mid caps, the other stocks were participating from other sectors. But now, because market is little stable and the short covering pattern in the mid caps is clearly seen, so that is panning out in the stocks like Petronet also. This has remained resilient near 200. For the last 8 months, it was hitting 200 levels, which was the support since the mid of 2017. Now, people try to go short. If you look at the open interest positions, almost 35%, 40% increase we had seen in the positions because the people were trying to go short. It did not breach 200, and rather this move has come on the higher side. Right now it is around 224. So my sense is the short covering which has started, it is not very huge yet. Around 1% cut we saw yesterday, and before that there was some cut. But my sense is this short covering may pan out more towards the December expiry. So you can remain positive in the stock. Look for a target of 235, and my sense is it should not go below 220 now, which was the previously highest call base. Now those positions are getting close, and that is where you will get more kick on the higher side.
Okay, thanks a lot for giving us those strategies. By the way, the SGX Nifty is suggesting that we could be flirting with that 11,000 mark on the index today.